how many of you are ready to learn a little bit about investing? Yay! And how to make your money make money for you. Okay, fantastic. So, we have ticked off understanding your money flows. We've talked about decreasing your expenses. And before we jump into investing wisely, I'm going to just have a little brief touch on saving. Saving is like the gateway drug to invest in. Saving is like marijuana or dacha. It's the gateway drug to investing. So you need to start saving to be able to move into this investing step. Now, it doesn't matter how much you save, and I teach in more detail on saving and money magic. It doesn't matter how much you save. It's about getting into the habit of saving. It's about the habit. And often people think that they've got to squash their debt before they save. And remember, and this is one of the key distinctions of my Money Magic program. If you are in inspiration, enthusiasm, gratitude, love, you become attractive for money. And what happens is when you start to save, even if it's a small amount, 50 Rand, 100 Rand, 500 Rand a month, whatever you can afford to save. And I know a number of you think, I can't even afford to pay all the bills at the end of the month. What are you talking about saving? Just start with something small and just commit to it and put it into a 32-day notice account. What happens is it's more inspiring to see your savings grow, even if it's 100 Rand or 200 Rand, than to see your debt diminish. Do you understand that? Also, because the debt is punitive, because someone's going to come after you with a big stick if you don't pay it, you will always pay it somehow. But because saving is not punitive, you're like, okay, maybe when I have enough. You're never going to have enough. You've just got to commit to it. And I want to share this with you. And this is an example. So this is one of my money magicers, Dawn Palatovich. And at the time, she's in a healing. She does a healing business, right? And she wasn't earning a lot of money. And she says, today, my fixed-term flexible savings account matured. So this was a year after she started Money Magic. I started it with 500 Rand per month a year ago, because that's all she could commit to, and increased that regularly. Today I made it a fixed deposit account with 30,000 Rand in it and moved it from a 5.1% to a 7.15% interest. I also have another flexible savings account, so the 800 Rand a month I was saving into the matured account is now going into that account as well, watching it grow. And then she does an affirmation, why are my money jars filling up so easily? So I want you to understand this, and this is the particular money magic that I want you to understand. She started with 500 Rand a month. She saved it for 12 months. This is now 12 months later. Her savings is 30,000 Rand a month. What? Hold on, but if you take 500 Rand a month and you times it by 12, that's 6,000 Rand. How did she get to 30,000 Rand? That's the magic part of Money Magic. And those of you that have done the Money Magic program with me will know that that's the magic part of Money Magic. Because what happens when you start to manage your money well, when you start to manage the money that you do have, there is like a magic that starts to get ignited. And suddenly you find ways to decrease your expenses, or gifts are being given to you and you don't have to pay for things. And then the magic happens and you can start saving more. And that's what happened with Dawn. You've experienced this, Deirdre?
Yeah.
Yeah, do you want to pop up and just say how, like, what that is?
Well, sure. Yeah, well, I did Money Magic, and I was retrenched, and I got 200,000 Rand, and I popped it into an account, and then got a new job 2 weeks later. So it was like, and it's many things. Like, I've got a friend who works for MTN. He gives me free data. So, like, I could give someone else some when they don't have, and then I just get it back.
Yeah.
In a different way. So
Yeah.
it keeps on cycling in a way.
Yeah. And it's one of the things that Marnita said, that you've got to start appreciating the money magic that is coming to you, even if it's not coming in the form of money. So like the free data, woohoo! And that's one of the things that happens in Money Magic. You start celebrating and seeing this abundance and the flows that are actually coming to you, right? And then you start, oh, I'm not paying for data anyway. I would normally pay 300 Rand for data. Let me put that into savings. And next thing you know, you thought you were going to have 6 grand at the end of the year, and next thing you've got 30 grand. Yeah. So I'm just saying that because once you've got 30 grand, you can start doing interesting investing things with it, right? You can start moving it into the next levels. Okay, makes sense? All right, so let's start talking about investments. So the absolute premise of investments is to start getting your money to work for you, because understand this, money is way better at making money than you are. Money is way better at making money than you are. You know how hard you have to work for money. Money doesn't have to work so hard for money. It starts to multiply and compound, and I'll explain that to you a little bit shortly. But what I'd love you to do is I'd love you to turn to the person sitting next to you, your partner, and share with them what is the biggest challenge, what is the biggest issue that you have when it comes to investing. And you're going to share with each other. I'm going to give you 30 seconds each, just the biggest problem, the biggest challenge when it comes to investing. And this time, the person with the longest hair is going to go first. Whoever's got the longest hair, you're going to go first. Me, turn the person sitting next to you and go. But there is an attitude to saving where you can't touch it. And those of you who've done some programs with me before will know, like a 32-day notice account, so that it's not just like, oh, I'm going to go and grab the money out of the account, but there's also like, oh, how can I generate more to come in? You know, and you start thinking in possibility. What if I put my money in the wrong place? Yes. What happens if you, so making the wrong decision, what would happen if you made the wrong decision?
Lose your money.
Okay, so the ultimate is I've lost my money.
Yeah.
The fear of failure or the fear of losing money.
With anybody else.
Okay. And so so then what happens? Your money sits in a bank. It doesn't.
End up spending it and not saving it.
Okay. So I'm afraid of making the wrong decision, and so actually let me just spend it. Yeah, it's sitting there. I'm going to spend it. Fantastic. Thank you. Great answer, Maria. Ting. It's like anything. The more you learn about something, one of the reasons why it's scary is because you haven't learned about it. You've never been taught about it. We're not taught in our schools about it. We're not taught in our universities about it. You're not taught about it. And so because you're not taught about it, you don't know anything about it. So it is scary. And also get this. You will make some mistakes. And that's okay. So I also want you to understand that in your money journey, you will make some mistakes. I've made some mistakes in my money journey. And it's okay. It's like anything in life. It's okay. But the worst thing to do is to be so afraid of not making mistakes that you don't take action, you don't do anything. And how many of you know what happens when you make mistakes? You learn, and you learn fast. Right? You learn quick when you make mistakes. You know, my retirement annuity, working it out, then seeing the return, realizing, oh, I learned. Oh my goodness. Then I looked at all the other things that I'd outsourced, unit trusts, and stuff, and I went and scrutinized them. Hold on, if this is doing it here, where else is it doing it? Oh, okay. Now let me learn more. Makes sense? Okay, fantastic. So let's get into the strategy and how to go forward. So let's just go back to the very basics. And the basics on investing is that there are financial instruments called assets, right? Who can give me some examples of assets? Who can give me some examples of assets? A house, a property, yeah? A property is an asset, okay? I want to be very clear that the property that you live in is not an asset. Okay, this is one of the biggest myths that you are sold by banks who are wanting to give you bigger and bigger mortgages. That your house that you live in is an asset. It is not. It's an expense. It's an expense that you pay for every month. And let me tell you, if you stopped paying every month, that house would go back to the bank like this, right? It's not your house until you make that final last payment. So often people think it's okay because I've got my house. Okay, don't consider your house an asset. It's not actually. And if you continue to live in it, if you look at the money flows, it's not ever making you income, okay? It's just making you not pay an expense if you've paid it off. Does that make sense? Okay, but it is one of the myths that we get sold. Don't worry, just put all your money and pay off your bond and do it, and then that's the asset. Okay? It's only an asset once you've fully paid it off, and often you're giving up your freedom for 20 years to pay it off. Because you have to pay that monthly thing every month. So, property is an asset. What else is an asset? Shares, absolutely. Shares, they're also called stocks. Yeah? What else is an asset? Cash is an asset. It is an asset. Cash is an asset. Did someone say gold? Cars. So, whoa. So,
If it's a taxi.
a car is an asset if it's an Uber. Right? So, if you're using your car as an Uber, then it's an asset. Right? If you are invested in vintage cars, right? Then they are assets. Okay, but if you're using a car as a utility vehicle to drive you from home to work, not an asset. Absolutely an expense. Does that make sense? Okay. All right. So I'm not going to put it on here. But okay, I'm going to put vintage car. I'm going to put wine. I'm going to put art. But these are highly speculative. You've got to really know what you're doing kind of assets, right? That's top level, and really stamps can be assets, but you've got to know what you're doing, and there's a level of expertise that you've got to have in that specific class. Okay, what else? Someone has said gold, right? So gold and silver are assets, yeah? Okay, and there's something called bonds. Bonds are also assets. Bonds are when you lend money to companies or governments. Okay, that's what the bond market is. So those are the different assets. And there are two types of things that you get from assets. There are two ways that assets make money. The first way is growth, also called capital growth. And the other way is income. So the easiest way to describe this to you is to use property, because property we all understand. We understand a house, and we can see a house, etc. So let's say you owned an investment property, and you bought it for 500,000 rand. So like a one-bedroom flat, you bought for 500,000 rand. The growth on the property is when you sell it in 10 years' time for R1 million, you've made 500,000 rand. Can you see that? All right. So again, it depends on the mortgage and the bond and what you've done, etc. But just let's use like straight cash. You bought it for 500,000. You sold it for R1 million. So the capital growth would be 500,000. Okay? So that's growth. Income, if it's an investment property, is what? The rent. Absolutely. So income would be the rent that you got from the property. And let's say that rent is now 4,500 rand a month. Right? And then obviously there will be expenses. So you'll have maintenance or levies or agents' fees or whatever that'll come off that, and you'll get a certain income. Right. Now, there are taxes to be paid, always. Okay? And one of the things to look at when you are investing is how, and as you start to invest more and more, is how to become more and more tax efficient. Okay? Because the government does need their money, but you don't want to give them, you know, you want to make it as tax efficient as possible, right? You only want to give them what you need to give them. So there is tax on this gains, and there are taxes here, and those taxes happen at different times. Zoe will be chatting a little bit more about, from stocks and shares perspective, what's tax efficient and how tax works there. Okay, does that make sense so far? Okay. The next thing you've got to look at is there are three levers that you can play with when it comes to assets. The first lever is the amount of money you put in. The second lever is the return that you get. There are two types of returns based on this. There is the growth and the income. And so you've got to understand when you're going into an investment that there's a return, and that could be a growth return, or it could be an income return, or it could be both. Okay? And the third thing that you've got to look at is the amount of time. These are the things that you can play with. When it comes to investments, let's assume that the amount of money, the lump sum you put in is 10,000 rand, and then you are committed to saving 500 rand a month. Now this could be in any different asset class. It doesn't matter. I'm just giving this to you as an example. Okay. let's assume that your return is 12% per annum. Okay? That's your return. And the amount of time is 10 years. So what you would have at the end of those 10 years is 149,173 rand and 41 cents. Now, can you see that you haven't invested anywhere near that? In fact, what you put in was 10,000, your original 10,000, plus 60,000, right? Your 500 rand a month times 12 times 10 years is 70,000. So can you see that the money has actually made 79,000 rand? So you put in 70,000 rand and money itself made 79,000 rand. That's why I say that money is better at making money than you are. See, often people see, when they see kind of investment amounts, they think, oh my goodness, I've got to make all that money. Or when I chat to people on my Money Magic program and we start doing financial freedom numbers and they see big numbers like 10 million or 15 million or 20 million and they start having apoplexies because they think, I've got to make all that money. No, you don't. But I want to show you how these things shift. Okay, so you've got that example. Now let's look at what happens if we change the return. Okay, so same investment, 10,000 rand a month, 10,000 rand lump sum, 500 rand per month. But we change the return. We now find an investment that's giving us 16%. Okay? The amount of time is 10 years. Now what we have at the end of 10 years is 197,000 rand. Okay? So you still put in the 70 grand, exactly the same amount. This time, money has now made 127,000. So remember, before in our previous example, when this was 12%, it made 79. Now it's made 127,000. That's almost 50,000 rand more. Just because you found a better asset class that was giving you a higher return. Okay. Still with me? Okay. Now, what happens if we change the amount of time? And we say, okay, it's not 10 years, we're going to do it for 20 years. So at 20 years, after 20 years, you've got 1.114 million rand. Now, what's happened is you've put in 130,000. You put in the original 10, you put in 500 rand per month. You didn't even increase it with inflation. You just kept putting in the same 500, right? So because it's over 20 years, it's now 120,000. 500 times 12 is 6,000, times 20 years is 120. So it's 130,000. Your money has made 984,000 rand. Okay? As opposed to the previous example, which was over 10 years, 127,000 rand. So can you see how much an importance time plays in it? The more time you give your money to start multiplying and compounding, the more work it does. It's exponential. It's absolutely exponential. Now, there are some of you in the room sitting there thinking, oh my goodness, I'm in my 40s, or I'm in my 50s, or I'm in my early 60s. I don't have the time. You do have the time, right? Longevity is happening, right? Our lives are getting longer and longer. You do have the time. Warren Buffett, who's my favorite billionaire, has the most beautiful quote. And he says, the best time to start saving is when you're 21. The second best time to start saving and investing is today. Okay. So those of you who are like, oh, I don't have the time, you do. So that's at a 16% return. I want to show you what a difference the return makes. Now also you've got to consider this in terms of when Zoe's going to present to you, she's going to be talking about fees. And fees diminish the return often. Okay? So let's assume that we only get a 10% return. Over 20 years, 456,000. So essentially, the previous example, our money had made 984,000 and it was at 1.1. This time it had only made 326,000. The return makes a difference. So this is one of the problems that happens when we invest in those packaged investments. The financial advisor says, this is a good investment. It's called the Sanlam Glacier. And you think, ooh, glacier sounds beautiful. Can imagine those Arctic kind of, things. Great. And then you just pop it in there. You've got no idea. Is it 2% or 4% or 7% or 9% or what? Etc. That's the original example. That's the one we were wanting, right? Now, let's assume, that you managed to decrease your expenses. A little bit like Monita said. You managed to just say no to DSTV because you're getting your Netflix anyway. So you said no to DSTV and you took that those 900 Rand that you're spending on DSTV and you added it to your monthly figure. Right? You just increased it. And you were getting that 16% that we were looking at. And you did it for 20 years. Now you'd have 2.6 million. So now your money has made 2.3 million instead of the 984,000 just by you putting in the extra 900 Rand a month. So this time you've put in more, but can you see what happens when you start playing with these figures? So what are you noticing, right? I'd like you to turn to the people sitting next to you and kind of give them like what you're getting out of these examples. And I'm going to give you literally 20 seconds each just for your nuggets, what you're understanding. Turn to the person sitting next to you, person with the biggest jewelry goes first. Whoever's got the biggest jewelry, you're going to go first and go. So where would you get to 16%?
Who's giving you 16%?
Who's giving 16%?
It's a great question. It is a great question. So last night, I just invested in an investment in the US that's a property investment. It's giving a 15.8% return.
Guaranteed or estimated?
Estimated.
Okay,
But that's their hurdle rate. So they don't necessarily take very many fees. They only take fees above that hurdle rate. And then all returns are going to be estimated. If you put money into your savings in the bank and they say, we guarantee you 5.5%, then you know you're going to get 5.5% and that's guaranteed. But when you get into more complex investments, it's not necessarily guaranteed. But then you've got to really look at what the risk is. So what is the risk? Who are these people? What's the track record, etc. But it's about learning. It's about figuring it out. It's about finding it out. Yeah? So, is it possible to get those kinds of returns? Yes. Is it always possible to get those kinds of returns? No. Right? So you can be looking at lower returns, right? Okay, I'm happy with 10% or I'm happy with 12% and this is what it's going to do. Yeah? You've got to do, so the key out of this is you've got to be learning. You've got to be learning, you've got to be learning. And we'll share with you some kind of key tips and tricks from other people and what steps they've taken. Yeah? But you've got to be learning. Anyone else, what's your key realizations so far out of this stuff? Yeah, Gail.
Start now.
Hey?
Start now.
Start now. Absolutely. Start now. There's no time to waste thinking, and even if start now means I don't know what I'm necessarily doing, then at least start saving and then learning. And in the next 3 months, 6 months, you've learned enough to go, okay, this is the thing that I'm doing now. And this is the money that I'm putting into that. So I'm going to invite you to all stand up and have a big stretch up. Because I'm definitely going to stretch you.
Yeah.
And to your right. And to the left. And to the left. And sit back down. Fantastic. The investment strategy that I teach in my programs is called the pyramid strategy. There is a reason why pyramids have lasted for thousands and thousands and thousands of years. It is because they have got very strong and very solid foundations. It's one of the most strong architectural designs in the history of mankind. And so, this investment strategy is not a get-rich-quick. It's a get-rich-slow, sustainably, without the roller coaster of get-rich-quick craziness. What is your biggest asset? Who can tell me? Who can take a guess? What is your biggest asset? Yourself, absolutely. So at the bottom of your pyramid is you. And this is you investing in you. You investing in your well-being, making sure that you're well. Because let me tell you, if you are financially free, it makes no difference if you are ill and sick and burnt out. So you're investing in you, making sure that you are well, you are healthy, sleeping, eating, etc., and that you're learning. Because the more you learn and the more you invest in you, the more you'll be able to go up this pyramid. And the quicker you'll be able to go up the pyramid. Okay. The next thing. Said that savings is the gateway to investing. And one of the things that I recommend is that you have savings and you have 3 to 6 months worth of your salary in savings. Some of you are not at that stage yet, right? So you're just in this stage and you're living paycheck to paycheck. The key is to then start saving. Now, these savings are not necessarily for your money to start making you money. This is not necessarily for your, in fact, it's not for you to start being like having that multiplying compounding effect happening. This is just so that you feel financially secure and safe. So that if you lost your job tomorrow, you would be like, you know what, I've got a 3-month buffer. I can make clear decisions. I can actually breathe rather than going into panic. How many of you found that when you go into panic and you make decisions out of panic, you make poor, bad, terrible decisions? Yeah. So we want to move you out of that space. Also, one of the things that you'll realize is that the financial game and the money game is as much an emotional game as it is a physical game. How many of you have experienced when you're feeling good, when you're feeling abundance, then opportunities flow in and money comes and it's so easy and it's all great? How many of you experience that? And how many of you experience that when you're in financial worry or stress and anxiety, it seems like all the taps get turned off? How many of you experience that? Yeah. So this savings, what it does is it really helps you to like just emotionally just be stable. Even if there are ups and downs, oh, my geezer's burst. It's okay. I've got 150,000 Rand in my savings account. I don't have to panic. Right? Okay. The idea is not to use it and not to dip into it for the geyser. Right? But the idea is to have it there as just the safety buffer so that you can make decisions. Okay. Then, the next level is gold and silver. Okay? So gold and silver is the next level. Some people jump this level because they don't necessarily like gold and silver, but gold and silver is an amazing store of value. It holds value. So even when cash goes up and down, even when exchange rates go up and down, gold and silver hold value. The thing about gold and silver as assets is that they don't actually have an income. Right? So like properties have an income, stocks and shares have some kind of income as dividends, but gold and silver doesn't. All it does is increase or decrease in value. But it's very good to have because one of the things that gold and silver do is that they are the complete opposite of the stock market. So when the stock market is going bananas and is high, gold and silver normally tends to go lower in price. When the stock market starts to go down, gold and silver comes up dramatically, right? So one of the things is it's nice to have gold and silver, just if you also are in stocks and shares, because it evens that out. And again, there's not a panic. Oh my gosh, my share portfolio has gone down. It's like, oh, but my gold's gone up. Okay. So when one zigs, the other zags, right? The next thing is property. We talk about investment properties particularly, and over here stocks and shares. The next level up is businesses, and the next level up is speculation. Speculation is things that are highly volatile, highly risky. So speculation would be things like venture capital, giving money to other people for their businesses. Right? When I say businesses, these are businesses that you are involved in, you sort out, you run, right? Or you have a lot of input in. Crypto is absolutely in the speculative top. Now, you do not have to go all the way to the top of this pyramid. The top investors, I see your question here. Some of the top investors in the world, right? Warren Buffett, just here. And in fact, all of these gold and silver property stocks also have their own mini pyramids, right? Where there are safer, lower return investments. So, for property as an example, right? You could buy a REIT. A REIT is not an actual bricks and mortar property that you own. It's actually properties that other people own and landlords have put together, and they put it into a package that's then traded on the stock exchange. So the underlying investment is property, okay, and land, But you don't actually have to go and buy the property. You don't have to spend 100,000 Rand and get a mortgage and get a bond. You don't have to do the maintenance. You don't have to do any of that, right? You can put 1,000 Rand a month into a REIT, right? And they pay you the income. They have to pay, by law, 90% of the income that comes from those properties. They have to pay back to the investors. And they pay you capital growth. Again, on these kinds of investments, there are fees, right? So you've got to look, what is the return? What is the fees? There is then there are platforms that are starting to allow you to get involved, again, because of the internet, in property deals, not in the form of REITs, but in fact in specific property deals. There's a platform here started by a guy that I was at university with called Wealth Migrate, which is a really, really interesting one, right? Yeah, Scott Piken, and that's where I saw the investment that I just invested in last night at 15.8%. It's in a medical building in San Antonio, in Texas. It's a specific investment. It's a 5-year investment, etc. So then you can buy your own, right? You can own your own property, right? Then you can do fancy deals with property, like rent to rent. A number of people are doing that with like Airbnb properties. They're renting properties from other people and then renting it out via Airbnb. But of course, this gets riskier and riskier, because what happens if you don't get the tenants in and then you're still paying the rent, etc. And it goes up like that. Does that make sense? So within each of these categories, property and stock and shares, gold and silver, all of these, and businesses, they're little mini pyramids. And so you're going to find where you feel comfortable. That's the big thing, finding out where you feel comfortable. Okay. So I invite you to all stand up. And Thea, I'm going to ask you to come to the front and sort out my video for me, please. And you're going to let Thea come through fast. And then you're going to turn to your left. And you're going to put your hands, quick. And you're going to put your hands on the shoulders of the person in front of you, and you're going to give them a little massage. You're going to make those noises like you're enjoying it. So now I want to share with you some real stories of people who have done this, that were like you, sitting in this seat 3 years ago or 5 years ago, etc., so that you can actually hear the steps they took. So that it's not just like, because this is lovely, but it's like theory, and I want you to hear the real steps. So this is Alida. Alida did my Money Magic program in 2013, and she's had incredible success from a property perspective and building up a property portfolio. So I wanted to share that with her.